numbers have been better than the street's expectations. I suppose the valuations also seeing what is happening with the stock price. But let me come to the performance of the company. I think the biggest question everyone has is, can this rate of performance sustain?
Good morning, and thank you very much for having me on this show. I'm really thankful to the entire market as well as the customers for showing tremendous confidence in the capability of LIC. We are working towards a sustained and profitable growth in the performance of the corporation, and this is one such result in that direction. I'm sure we are confident that we'll be able to sustain it.
What has also helped, especially with value of new business margins, your VNB margins, is your proportion of non-par and the contributions from there gone up to 36%, quite starkly. Is that as a result of change in strategy? Do you see that continuing? And how do you see these VNB margins into Q4 and for the full financial year?
As I keep talking in the previous quarters also, we had taken a directional shift ever since the time of our IPO, and our focus on non-par share has been one in that direction. We have been talking about an improved product mix as well as an improved channel mix, and our effort has been continuously on those two areas, and both the areas we were able to show some good positive results. In the current quarter, we have reached around 36.8% share of non-par in APE to total individual APE. And if you will find that this is almost stabilizing in that area, because even in the quarter 2, we had reached around 36.3 or 36.4%. So we are in that range. I'm sure that this will continue, and we can show a bit more improvement on the share as also during the last quarter. In terms of VNB margin, yes, we have reached 18.8%, which is a clear 100 basis points above what we did for the entire last year. We are expecting that to continue, because for the quarter 3, we had 21 point something for the quarter as VNB margin. We hope to maintain or improve upon that during the last quarter also. So the VNB margin for the year also will see some improvement from the current levels.
This quarter, Mr. Doraiswamy, also baked in the impact of GST. Can you elaborate what that GST impact was? And once we see this removed from quarter 4, how do you think those metrics change?
We had made an initial assessment of the impact or the GST, particularly the non-availability of input tax credit, and that has already been factored in when we calculated the VNB margin. You would have seen from the VNB walk that there is an impact of around 280 basis points when it comes to the operational efficiency. A good part of that, was the GST reversal also that is accounted for. We are continuously working on having a full proper assessment of the impact of GST, particularly in the last quarter. Our numbers will be much better. That's what we are working towards. We are working on the operational expenses rationalization, and we have been continuously witnessing a reduction in the expenses ratio. And this impact of GST, we are confident that it will get adequately addressed through the rationalization of expenses, point number 1. And also, we are also looking at a good top-line growth by which the ratios can still be further optimized. We are confident of managing the effect of GST impact using both the results that are available to us.
Some of the margin also comes from yield curve assumptions. So, do you think some of those assumptions may be on the higher side? Is that a risk factor, a possible risk factor?
No, madam. See, the assumptions are made based on the market availability and market trend. So, this is a continuous process. We expect the economic assumptions also to be stable for the next quarter also. That is what is our expectation. And the growth in margin because of the product mix that has come about will further get strengthened during the current quarter. That is our expectation, ma'am.
Okay. A lot of exciting things that the street is also looking forward to, or is trying to understand when this will happen. Any clarity that we can have on maybe the government reducing its share, a possible OFS coming in, or further divestment?
Government as well as LIC, we stand committed to the requirement of the regulations that a 10% of offloading within 5 years from the date of IPO should happen, and we are on the track to achieving that. I expect that the government will be taking a call on the next round of offloading. What form it will take will also be decided by the government, but it may be in the priority of things that should happen as quickly as possible. It may not happen in the current financial year because it will take some time for us to roll it out as and when the decision is taken. It may take some 1.5 to 2 months for us to do the initial work. Maybe it should happen early in the next financial year.
So first quarter, first financial year, next financial year, first quarter possibly?
The final call will be from the government, madam. I think Deepam will be able to announce it as to when exactly they are planning to bring it out.
Sure. One more interesting thing, sir, is in your last call, you talked about a foray into health insurance as well. I mean, that would be a huge move if LIC came into that. Anything that you can add on that in terms of direction, timelines? What is the route you're looking at?
As I told you in the last interview also, that we were looking at, or we are looking at an opportunity as a strategic investor. Our foray into health insurance as a player would have been required if the Act amendment had happened allowing composite licenses, but now that that is not part of the current amendment, we don't have an urgency or a strict timeline to be deciding on the foray. But we are a big investor and we keep investing in many organizations and many institutions, some of which as an ordinary investor, some of which will be as a strategic investor. So we were looking at having a strategic investment in a standalone health insurance company that we are now not completely off it, but there is no urgency for us to complete it as quickly as possible. So we are not keeping a timeline or any particular deadline to have it done. We are looking at the opportunities that are available in this sector of standalone health insurance company. We are analyzing the various options available, and if on the basis of the analysis we find a very good opportunity which makes it a really compelling opportunity for us to go ahead, we will be looking at it. Otherwise, we don't have a specific deadline for this. It's a part of our investment strategy. We can continue to focus on many sectors, and one such is a health insurance sector as well.
Okay, so fair enough. It's not a huge strategic shift. It's one investment option, and you've sort of put a pin in it for now. Trying to understand what is the trend you see in commissions, as a lot of players and post all of the policy regulations also see maybe commissions going down. Do you see commission tweaks as well?
If you have been watching us, we have been consistent in maintaining a strict vigil over the kind of commission expenses that we are incurring, and we have never increased the commission when the regulator removed the commission regulations and brought it under the overall limits of expense of management. We did not leverage it, or we did not make use of it to increase the commission. So hence, the current discussion going around the increase in commission that has happened in the last few years is not directly attributed to LIC. So we feel that the discussion that is currently happening is on bringing it back to within acceptable limits, and we are confident that we'll be able to meet any such regulatory changes that are being talked about. And we expect that it will not have too much of an impact on LIC, but if the regulator wants to have a further reduction from wherever we are, we will be in complete compliance with whatever the regulator wants. We are in regular touch with the regulator. I'm sure that we'll be continuing to be a compliant organization, and we'll be sticking to whatever is being expected from us, either from the statute point of view or from the regulations point of view.
As we round off this interview, Mr. Doraiswamy, I'm just trying to understand your strategic thought going forward, and not just for the next one quarter, but the next financial year as well. Because since LIC's listing and in the last couple of quarters, there's been a clear shift towards ensuring profitability and looking at those numbers. I think increase in ticket prices have also helped. What is your strategic outlook there?
As you are watching the corporation perform, we have been continuously focusing on improving our profitable growth. We did suffer a setback in terms of volume growth when the new master circular was introduced on 1st October 2024. And to be compliant with the new provisions that are brought in, we had to tweak our policy conditions as well as realign the commission structure at that point of time itself. So we did suffer a temporary loss of growth in the business, but now that a full 1 year period is elapsed after that, we are back into good growth area. We would like to continue to focus on a very profitable growth, a product mix strategy being taken forward, as well as the channel mix. So we are increasing our contribution from the bancassurance as well as the alternate channels, and that has also seen a very good improvement in the current year for the first 9 months, and we are looking at improving it further. So on the overall front, we would like to live up to the expectations of all the stakeholders. Particularly, I would like to talk about the expectation or the confidence reposed by our Honorable Prime Minister in the Rajya Sabha speech yesterday. He had praised the performance of LIC, and that puts us all the more increased responsibility on our shoulders to see that we continue to work towards living up to the expectations built on the basis of our past performance. We will be trying to balance the interest of all stakeholders and ensure that we continue to grow in the direction that we have already taken.